Give me a thumbs up for these little puppies. Say hi, guys. What's going on, guys? It's Investing Hustle here, and today I'm going to do a very quick video on NIO stock. So if we look at NIO stock right now, they have been beat up, and the main reason is because they've announced some pretty bad earnings, but we're going to get into that real quick. First, let's take a look at NIO right now. NIO is currently down 20.67% today, and as you can see, they have a huge gap here. Usually what you see with the gap is it starts to get filled, but unfortunately, because of these earnings, NIO could continue to decline throughout the week. We're going to keep an eye on NIO for the rest of the week. Let's look at their chart since their IPO. So if we look at NIO right now, they seem to have a very nice support line at around $6. So we see NIO constantly hit $6 and then bounce back up right after that. So we've seen them hit $6 1, 2, 3 times. So I'm thinking $6 is a very strong support line. Even their IPO, they kind of started at $6. So if we do see NIO hit $6 again, I do think that's an amazing buying opportunity for this company. Who knows if NIO will go back down to $6, but I do think anything under $6.50, I would personally consider NIO a buy. But let's keep in mind, this is strictly for educational and entertainment purposes. So make sure you do your own due diligence. This is a very high risk stock. Super volatile, as you could see by looking at these charts. So if I do see NIO hit $6 or even less than $6.50, I will be very tempted to start a position with NIO. Right now at $8.04, obviously NIO looks very tempting, but I do think there's still a bit more room for downside. I guess it all depends how the investors react to it. Let's take a look at NIO right now. Their technical analysis is currently a buy, and a sell. That's the 1-day technical analysis. The 1 minute is a neutral sell and a strong sell. If we look at NIO right now on the 5-minute charts, they currently seem to be downtrending. We're going to see if this pattern continues for the rest of the day. Right now, they're sitting at $8.04. I won't be surprised to see them go below $8 by the end of today. NIO is in the bottom half of the 52-week range. So yes, I would say there's more room for upside versus downside, but I still won't be surprised to see them go back down to $6.50, $6, which would be a great buying opportunity for NIO. At the moment, NIO has a market cap of $10.4 billion with 1 billion shares outstanding. NIO currently has $2.5 billion in assets with a market cap of $10 billion. Of course, NIO doesn't have a price to earnings because they're not profitable. So let's go straight to this article, which talks about NIO sinks after Chinese electric car makers post wider than expected loss. First of all, I found this video very interesting, and if you know nothing about NIO, we could watch this video real quick. It's pretty much just talks about the company's history and everything you need to know about this company. So behind the label on NIO. So NIO was launched by William Li in 2014. Company car vision, on-demand delivery of power and parcel-to-car delivery. In 2016, the company filed for a $1.8 billion initial public offering on the New York Stock Exchange. On May 2018, NIO opened its first 3-minute battery swap station in Guangdong, China, near Hong Kong. On October 17, NIO announced that it was issued an autonomous vehicle testing permit by California DMV. Its signature model is EP9 track day car and directly water-cooled motors, and it's a 2-door coupe. Another signature model is the ES8 on June 18th. It's a sport utility vehicle. It's a lithium-ion battery pack. It's a 5-door SUV. Since 2014, NIO has set 5 records in their track-only EP9 for the fastest lap for an electric-powered car. So let's move on to this article. Let's talk about their earnings. So NIO slumped 17.1% today. Well, if we look at it now, it's more than 20%. NIO is currently down 20.67%. But at the time, I guess they slumped down to $8.42 after the so-called Tesla of China posted a wider than expected loss in the fourth quarter and said it experienced a greater than anticipated slowdown in monthly deliveries of its ES8 sport utility vehicle. The Shanghai-based electric car maker posted a fourth quarter loss of 3.5 billion renminbi, which equals to $520 million American, or 49 cents per ADR. Analysts expected a loss of 32 cents per ADR. NIO said it delivered 7,980 ES8 sport utility vehicles in the fourth quarter in China, versus 3,268 vehicles in the third quarter. The company said, however, that the deliveries of the ES8 in January and February were 1,805 and 811. So on January, they delivered 1,805 cars, and on February, they delivered 811. So that's a drop of 1,000 vehicles in 1 month. So this reflects a greater than anticipated slowdown in monthly deliveries compared to December 2018. The sequential slowdown in vehicle deliveries in January and February were mainly caused by accelerated deliveries made at the end of last year, anticipated of EV subsidy reductions in China in 2019, the seasonal slowdown surrounding the January 1st Chinese New Year holidays, as well as current slowdown of macroeconomic conditions in China, particularly in the automotive sector, NIO said in the press release. And some other bad news is the company also said it won't be building a factory in Shanghai. It had signed agreements with the government in 2017 for the project, which we're going to get into that right now. So Tesla's competitor NIO abandons factory plans. So Chinese electric car maker NIO is abandoning plans to build its first factory and will instead continue contracting out the work to a larger automaker. Shares fell more than 17% in early trading today on the news. So NIO pulled in $720 million in revenue last year, but couldn't turn a profit, losing $1.4 billion in the process. By putting its factory plans on hold, the company says it'll be able to put more of its money towards achieving profitability. Obviously, investors aren't happy with that decision. So on the other hand, Tesla sold $1.7 billion worth of imported cars in China last year and is building a new factory in Shanghai to produce lower cost variants on the Model 3 sedan for sale to Chinese drivers, avoiding costly foreign tariffs. In its latest filing, NIO said it would likely continue to use its contract manufacturing partner, JAC Motors, for the next 2 or 3 years. NIO will begin delivering its second car, the 5-seat ES6 SUV, later this year. So right now, investors are not happy. Investors dumped shares after NIO said it would likely see a greater than anticipated sequential decrease in deliveries in the first quarter of 2019 and continued weakness in the second quarter. The companies blamed the slowdown on smaller Chinese subsidies for electric cars, the New Year and the Chinese New Year holiday, and China's overall economic picture. From the looks of it right now, it's not looking very good for NIO stock. They do continue to decline today, down $2.09. Like I mentioned earlier in this video, if NIO does drop below $6.50, I might be tempted to start a position with NIO. But as of now, I'm going to be watching from the sidelines. NIO does seem to have a lot of competition with Tesla, especially with them opening a factory in China. And then the fact that they decided not to open their own factory, investors aren't very happy with that. And I don't blame them. So right now, things aren't looking good for NIO shareholders, but at any given moment, anything can change. But for now, that's it. That's it for NIO. Let me know if you guys enjoyed this video. And if you did, don't forget to leave me a thumbs up. Don't forget to hit that notification bell and smash that subscribe button. I'll see you guys on my next video. Bye-bye.
Place this company, if you could, in some context. So we mentioned a $10 billion market value. That is 1/5 of Tesla's market value. And NIO has only sold what? I mean, really just a few thousand cars to date, maybe a little more than 10,000. Yes. Where does it fit within, I guess, the Chinese electric vehicle market? And is it a threat potentially to domestic producers?
Well, it's a young company, but it's the real deal. They have about 0.5% of China's total electric car market, because the market last year sold about 1.1 million passenger vehicles. NIO produced probably somewhere around 11,000, 12,000 cars last year, now around 8,000 per quarter. I think we'll see something like that. They make what many think to be a very good car, but they're still young. They're still learning how to ramp up production, still at about 1/5 the size of Tesla's production. And they are still primarily in just a few cities in China, and they're not national. China doesn't have national charging infrastructure to support electric cars across the country in a sustainable way. So it's still early days, but they are hitting every target that they've set for themselves the last year or so, and so they need to be taken seriously.
A lot of the news surrounding Tesla has been about their struggles to command a higher price for some of the newer vehicles. They're trying to lower down to this mid-30,000s range for some of their models. Where would NIO come in against that at this point? And I guess, how do they get there to a lower price point?
Yeah, NIO's going to probably be somewhere around that lower price point eventually. I think around 300,000 Chinese yuan, which is probably around 50, a little bit under 50,000, which is very high for the Chinese market. They're definitely at the top end, and I'm sure they want to bring that down at some point. So they aren't competing with the smart car market, which is much of China's electric car market. But Tesla is still exporting to China, not producing in China. So NIO has got to use the window that they still have to figure out how to ramp up production, lower the price, increase their service to be able to establish their brand before Tesla and Daimler and Audi arrive with electric models.
Hey, Scott, how much do they benefit from the rules in China right now, just in terms of the benefits you get if you are buying there, and what the administration there, what the government there will do to subsidize it?
Sure. Well, they benefit as much as anybody by, the government still provides subsidies, though not as high as they did in the past. They provide a bunch of funding for charging infrastructure, for the battery industry, which has helped NIO grow. NIO has a good relationship with the government in Shanghai, and they have worked closely with the companies helping them manufacture. So definitely, without the government support creating supply, generating demand, it's going to be hard for companies, including NIO, to grow. But the Chinese government has tried to reassure everyone that their drive to electrify their car market is not going to waver.
Scott, you said that the cars are pretty expensive when it comes to the Chinese consumer's eyes. What about the brand image? Does Tesla have a superior brand image in China, a kind of more superior one still, perhaps because it is imported?
But I think Tesla has they have the top brand recognition and reputation amongst electric car makers everywhere. And a lot of people just don't think of Tesla as an electric car company, just as a luxury automaker. NIO has done a lot in this first 3 years to strengthen its image, coming out with a very fast concept car that set the world speed record for its NIO houses, where people can go and experience the NIO brand. Getting a lot of media attention in the United States and elsewhere. And so they are on the right track, but they're still young. They have to get over these first few early years to establish themselves, not slip up. And also, just China's such a large market and has such up and downs, as you reported. Growth was slower than expected in the end of 2018. It's still not picked up yet, and so the overall consumer economy is sluggish, and so they are going to be facing some wins that they need to fight against, but they so far have done a pretty darn good job.